What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol AMAT for Applied Materials. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First thing I need to let you know is that they gave us an earnings announcement after the bell today, so let's flip on the extended hour session and see what's going on with the numbers. So my goodness, quite a bit of volatility. What you'll notice is huge red candle right out of the gates, making an overnight low down here, closer to about 144, and then immediately sort of retrace. Notice that the upper wick on the very next candle takes us up towards the high of the day's session. Now, whether or not that's a true print, sometimes Thinkorswim likes to throw us some curveballs in the after hours. We won't know for sure, right? However, just a fair bit of volatility. Even if it only retraced to the top of the body in here, that's still a huge move. Notice that that's 151 from 144, so about $7, give or take. I mean, still massive range here inside of the post-market from the earnings announcement. So let's consider that we'll likely be opening on a gap down. It's not a guarantee. A lot can happen between now and 9:30 when the bell actually rings. However, again, based on what we have in front of us, I would say it's highly probable. Let's say that the anticipated open is at 151. We obviously know that the overnight low is down here at 144.75, give or take, and we want to know where the low of today's session was. Let's turn this off now. Remember that those numbers are subject to change, but what we're about to discuss is a framework to help us navigate the open instead of saying that these are the must-hold numbers, right? So basically what you want to look for is the opening print. The first scenario, whenever we're dealing with a gap, could be up or down, is the gap and trap. So we would look for something like this. Failure to take out the overnight low, trade back long through the open for a long-sided trade exactly to fill the gap to 154.75. Now, keep in mind, because the opening print or the forecasted open is so far away from the overnight low, that's going to make this trade extremely difficult to play out. Remember that it's going to be better if we're here. Look at your risk reward, right? If we do something like this, fail, now your reward is essentially all of this to fill the gap instead of about half that from here to here, right? So if the open can get closer to the low of day, or excuse me, overnight low, that's going to be a much more easier trade to pull off. The other scenario that does make this a little bit easier is if we still open here and only put in a brief little move like this and then immediately reverse back up through the open, then simply put your stop as under the low of day. And, you know, depending on where that actually unfolds, maybe you might get a 2-to-1, 3-to-1-ish trade ratio on your hands. That's the only scenario where, you know, this is potentially a feasible trade. If there's really any exploration more than 50% here, wouldn't really be swinging for the gap fill on any sort of trade here. Just noting that, again, the risk doesn't really make sense. So that's the upside play. That one, you know, I don't know how many people out there are thinking about that, but that's always my first thought whenever I'm dealing with a gap. Scenario number two, usually the more common one is the gap and go. And by common, I mean more people are thinking along these lines as opposed to scenario one, which is why scenario one actually unfolds. But that's a different story for a different day. If we open here, put in some sort of bearish flag, could look something like this. Notice that we're coming into a ton of support. Now, where's this support coming from? Well, if I scrunch up the chart, what you'll notice is it's a very historic breakout point. Look at all of these touches from in this zone, 144 down to about 142. Big area of prior resistance. Basically, anyone who got long in this section of the chart, it would be reasonable, right, for them to defend their long position by turning into buyers here, hoping to push the price back higher, right? They're looking for a break, retest. Maybe we use it as a higher low and then do something like this over the course of time to get back up towards these highs. Again, that's not a trade that would unfold over the course of a day, but all I'm simply saying is that there's a ton of support down here, so I wouldn't really push your luck on a short-sided trade based on a bear flag that takes us right to here. So bearish trade, not really that ideal inside of Applied Materials. I really do think that this is going to be a patience play. Wait for some sort of intraday setup that does form with clear risk reward based on the gap, based on the two rules that we have. The only sort of reasonable thing that I could see unfolding would be, again, if this is where the anticipated open is truly going to be, a shallow little move lower, then retracing through the open for that long to fill the gap. That's really the only attractive trade I can see as of right now. Stop goes here, target's up here, just makes sense. If there's anything else that's not this, I would sort of be patient, wait for a better setup to form, and wait for that, you know, more clear setup, more intraday data, more intraday structure that will give you some guidelines. That's really going to wrap up the video. If you enjoyed it or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.